Hey everyone, and welcome back to another Sunday Scan. I hope that everyone had a fantastic week. We received a ton of email submissions and also submissions in the comments from people who were interested in the Traders for a Cause ticket. So we ended up picking two winners from that, which we've been in contact with both of them. So you already know if you won by now, but I appreciate all of the applications and all of the stories. And we received just some incredible stories from a lot of different people. And it was a super difficult decision, but we did get and we did read every single one of those submissions. So don't worry, we got them. But we just want to thank everyone for participating in that. And then we selected two exceptional winners for that. And so they are going to be attending Traders for a Cause this year. And we are looking forward to seeing them there. But for everyone else who applied and shared their story, just thank you so much. It was very touching and very interesting to see so many different backgrounds, so many different stories. And we had some very kind words for myself and for some other people who have been on Scan. So we just really appreciate the entire Sunday Scanned community for reaching out. And congratulations to the two people who were selected, who we've already been in contact with, and they have confirmed that they are attending. So on this week's Sunday Scan, we're going to bring on Stan again. For the main watches, and part of the reason why is because Stan and I just filmed an exceptional episode of Trading Takes with Tim Grittani, who was generous enough to share his time, and we spent an hour basically picking his brain about if he were to personally train someone how to trade stocks. How would he want them to do that? And what specific steps would he have them go through? And what things do they absolutely need to know? So you have to watch that episode. It's fantastic. And we will link to it right here. Okay, so let's get through a couple of these charts that we're moving for the week. We'll just go through a few of them, and then later Stan and I, we go through a bunch more. So we'll just keep this first part relatively quick today. So the first one that I want to just touch on is NVIDIA. We saw, last week or 2 weeks ago, we had another dip due to some of the similar reasons for the dip a month ago. And we were having a very similar reaction where, big dip down due to some of those factors and then rip right back up. And it was the same thing this time, made a higher low. And as you can see, if you were to draw like a trend line over here and then one maybe down here and up, you have just a giant kind of like a tapering wedge happening. And so NVIDIA is really just consolidating within that. And so sometimes it's not about picking a huge direction, but more just capitalizing on the moves while they're consolidating within that very large range. So one thing that I was watching NVIDIA for a possible mean reversion trade at the end of last week, because I figured with the amount that it was up, with some of the variables that were in play, there was a decent chance that after going straight up, it could dip and mean revert, but we never really got that. But it was fine because in situations where, the stock was bid, it runs into a Friday, it has a lot of call options on it, but it doesn't really flush. It just kind of stalls. And so that's actually not a bad way to be wrong is if something's just flat. It's not really going against you. It just doesn't work out how you think that it would. And I'll get into some of the reasons why that happened later on with Stan, but it's really more, it's taking into account that the chart shape, even if over a week or something, something can rally close to, 20% or 15% or a very significant move. A rally over here that looks very sharp and steep is different than a rally over here. And part of the reason is because in the options world, like the calls get way more overextended after these elongated runs versus just these big bounces off the bottom. And then also when you have a bounce back happening, you have a lot of weak hands were shaken out during the dip. And so you have more strong hands or people who are intending to hold the stock or more institutions that are usually involved here. And they don't get shaken out the same way that after a much larger run up, you might have a dip. So it was on watch for a dip into the end of the last week, but never happened. So that's fine. And if it continues to run, then maybe when we have more of an extension, then we could look for that mean reversion. But that was a name that was on watch and had some significant moves over the past week. And then the other one was SMCI. So on a scan that was more recent, we talked about how this was coming up into that dip buying range or that possible bounce range rather. And so
if you look at this big consolidation period, this is where, you had the trading in a channel, SMCI, earlier in the year, or the end of last year, where it consolidated for a long time, had that earnings report and a big episodic pivot, or basically a giant change to the narrative of the stock. And it was the earnings and everything caused that giant run up. And then after we've kind of, mean reverted all the way back down, usually when it gets to the top of that prior channel, that is a good spot to look for a potential bounce for, and we estimated around 50 points of range, and we got a little bit more of that. But you can just see that using these rough ranges after something's been sold off enough and it doesn't have any new catalyst taking it down, there's a good chance that when it gets back into these key areas where a ton of volume was traded, that there's a good chance that a bounce can happen there. And so as long as you're kind of looking for signs of a potential bounce, waiting for a level to have some risk off of that, and that can be a great way to either play it with some calls or some other things, because again, it looks like a small bounce on the larger time frame, but on the smaller time frame, these are pretty significant moves, especially if you're playing it with either with equity or with options. You could have had some nice trades on that. The next name we'll get into quickly is NVAX. So this was one that I walked through in the room on Friday, and it wasn't a huge trade, but it was a really good example of a couple of different concepts. And so I just wanted to talk through a couple of those. And so you can see NVAX has been up and down for the last couple of months. This has been a volatile name, but it's really worthwhile noting where these key areas are. Where has it run into resistance, before, and where does something happen when it gets to a level like that? So as this was moving in the room, I said that it had a lot of key levels between like that $13.80 area and that $14 area, and that's exactly where it had stuffed into in the past. And so it had a piece of news on it basically saying that their new product was, available nationwide. So it caused a bit of a spike, and, that was down here. And so really, if I zoom in, what I was looking at was, this is the catalyst, causes some short interest covering to happen, and then it kind of, it's about anticipating what range could it run into. And so I'm looking at the volume profile, and I'm looking left. So like we talked about on the larger time frame, that $13.80 area to $14 range was where I was looking for it to potentially exhaust out. And what does that mean? It means that after it has, some new demand come in, after it has some short covering, when you have basically everything going in its favor, and it starts to basically struggle at a level and exhaust out. So it's basically giving it everything that it has, and it's not quite enough to break that key level. That can be a good spot to use as a potential risk. As long as it's failing off of that level, it dips and then it's kind of failing to reclaim it. And so that's exactly what I was looking at. I walked through a couple of levels, and it was basically a process of once it got up to that $14 level, it exhausted out, looking left, there's overhead resistance. Then it's a matter of, okay, if this is where I think the potential top is going to be, I want to see it fail. I want to see it, kind of try to reclaim and get stuck at another key level, and then, fail under that. And so as a move like this is happening, you're just drawing lines under these big flush marks. And then once it eventually starts to fail, you're using those prior supports along the way up as resistances on the way down. And that's how you can get some nice trades and fades along with that. So a nice little trade there. Again, not a huge trade, but it's a good example of just using those key spots on the way up. And then as it starts to fail, under those levels, then that is a good sign that you can have a potential trade there for failed follow through. So it's just a quick one that I wanted to run through. And then the final one was DJT, and that one was moving on Friday. And this was the exact same setup that we saw with BYND, with RILY. And it's basically the stocks that have a higher short interest on them. They have low volume. Sometimes it's on a Friday, and they get some kind of a catalyst. So in this case, Trump said that he's not currently selling shares, and that was enough to basically cause some short covering. And so if you have a low volume day, you have a stock with over 20% short interest on it, and it has a catalyst, then it can basically start to squeeze out, scare a lot of the shorts that are in there. And as it exhausts out, it halts up a couple times. You basically just watch the volume profile to mirror the price action with this very specific setup. This is something that I watch and that I trade. I didn't end up trading this one because I was in NVAX at the time, and I like to trade usually one name at a time, but sometimes I'll branch out, but I missed this one. But you could have had traded this very similar to Riley and to BYND. So again, lower volume day, a stock with a high short interest on it. It has a catalyst. It squeezes out. You're waiting for it to exhaust up into a level looking left. And then usually you're just waiting for that failed follow through, the volume profile to change, and then having those key levels to watch on the way down. And a lot of times they give up half of the move or sometimes the entire move after it's done, as long as the catalyst was not something that was absolutely fundamentally changing to the stock. So those are just a couple of names that I want to run through quickly. And now, before we get on to the next part, and I'll bring Stan on, I just want to give the disclaimer that neither Stan nor I are financial advisors, and these are not buy or sell recommendations. This is all for informational and educational purposes only. Now let's bring on Stan. All right, we're welcoming Stan back on for the second week in a row. Stan, we had to have you back, and part of the reason is because you and I just did a Trading Takes episode with Tim Grattani, and it was just a fascinating conversation. You and I talked to him about how he would personally train a trader either from scratch or how he would mentor someone who's more advanced to get to that next level. So thanks for coming back on Sunday Scan. And how did you like that episode? And what do you think people will take away from watching it?
Right. Yeah. Thank you, Chris. And, thanks for having me back on again. It's always a pleasure. So the episode with Tim was amazing. I mean, for me, for one, I haven't seen or haven't seen Tim in a long time, as far as him being in hibernation or as he's going through his journey. And it was great to get to speak to him and get his perspective on not so much the market now, but more so how the market has changed and adapted, and then all of the other great topics that we discussed. So it was good catching up with Tim all together.
Absolutely. And I just encourage everyone to check out that video. And I think that you'll get a lot of value from it and to take notes during it. And, Tim is just a wealth of knowledge in many areas. And it was just a pleasure to speak with him. So now on to some of the market stuff. Stan, how was the market for you over the last week? What are you noticing? We have things like the Fed meeting coming up. It's going to be another volatile week ahead. So where's your head at with the markets? And then we'll get into our main watches.
Yeah, absolutely. So, last week we saw, obviously we had the TNON overnight, gap up, and it went to like 130 or somewhere in that range from $3 or $4. So that one there, it was essentially a warning shot, right? Of risk management, and unfortunately, it's tough to manage risk in a situation like that anyway, when it just there's no liquidity and it skips on little to no volume. So that fortunately I was able to avoid that. I don't really I know there were some scares out there and a few people got dinged, but overall I think due to the how expensive locates were and just the scarce opportunity to actually obtain them, it actually saved a lot of people. I think, like I said, that's why I mentioned more so of a warning shot, because we saw something similar happen with CXAI a couple years ago, or last year, whenever it was, and then a few months later, it was TOAP. So for me, that's, like I said, when I see something like this in the market out of nowhere, out of left field, I always pay attention to it and just, provides me a little bit more caution going into the upcoming weeks. And overall, like you mentioned, we have the Fed meeting next week. I think, volatility is upon us, which is great. Essentially, that's kind of what we focus on, the opportunities, the, mean reversion trades, et cetera. So we'll be excited to participate in volatility. And again, as mentioned previously as well, if that's not your market, there's nothing wrong with sitting it out or trading smaller size. Volatility market and environment can be extremely forgiving, or it could be very painful. It's just, if you're wrong, you're wrong, move on. If you're right, scale in. When the move stops working, move on. And then on to the next ticker, right? That's the point of volatility. So that's essentially, some of my thoughts for the past week and going into next week.
Great. Yeah, I totally echo that. And last month we had the big sharp, correction, and then just basically a straight up rebound. And, so far it's kind of been a similar situation where we had a pretty sharp sell off due to some of the same factors. And then, we had this pretty sharp rebound. And a big part of it was led by NVIDIA and, just the relentless call buying, the relentless buying in general. Every dip was soaked. And, I had it on watch later in the week for even a mean reversion trade, but it's honestly, it can happen, but a rally back after a sharp dip is much different than a huge overextension with many, many weak hands in there. And so even though the move itself might be straight up and look similar, the people who are in the stock, the audience, the shareholders are a little bit different. And so it's harder to get more of a mean reversion trade on something that's bouncing after a sharp correction versus a big overextension. So when I was reviewing my own trades and going into that was just something that I wanted to share, because if you're zoomed in on something over the course of a week, it can look identical to a prior time. But if you zoom out, you have to get more context of why was this acting differently than it was before. And so that was just something that I wanted to touch on. We've had a sharp rally back, and a lot of it is based on what people think the Fed is going to do and some other things. So I think Wednesday it'll be a sign that either those assumptions are correct, or the Fed says something that surprises people, it spooks the markets, and we kind of head back down. So I think it's going to be a lot of preparing for multiple scenarios as always, and just having names that are the strongest of the strong that fit the theme. And then the weakest of the weak that also fit a theme, and then just kind of having go-to names for either scenario. So Stan, what do you have on watch for the week? What specific tickers are you watching?
So I have a couple of things on watch. The first one that we can start with is DJT. So I think on Friday, there was a headline. Trump essentially announced that he's not selling his shares. So I don't know if he announced earlier that he was selling and now he just changed his mind, or it was just assumed he was selling and all of a sudden he says he's not selling, whatever the case may be. But it had a nice, end of day, essentially clear out. You have the catalyst, end of day, right? The headline acting as the catalyst, and then you had that clear out, the volume. So I actually took this trade, shorted some, added some here, and then just covered along the way. We can throw the chart on here later on, but the whole idea is you had this abrupt shock to the existing supply demand, right? You can kind of see your, if you just put in a couple of lines here. So this is essentially your entire intraday, your entire day consolidation between 16 and 17 bucks on whatever volume, and then here comes a headline, here comes a catalyst. It shocks the supply demand equation. It lopsides it, and that's where you get essentially the inefficiency, right? Your edge, your opportunity, whatever you want to call it. And because it was such a sharp shock to the supply and demand, it's essentially what got me interested. And at that point, it was just more so looking back into some key levels of previous. I like to go back on a 30, 60-minute chart, whatever, and then kind of look at where was that previous consolidation, where was that previous indecision point and was able to scale in versus this 2021s. So that was the trade on Friday, and we'll be on watch for the upcoming week because as we are approaching elections, right, as we're approaching that time frame, DJT is a type of ticker that is influenced and news driven. So there will be volatility, there will be opportunities, any gap ups and parabolics. I'd like to participate in that, or even for if we open on Monday and shove something 1920s or so versus this level here, I don't mind participating again. But the whole point is it's going to go on radar more so consistently moving forward, given its ability to be influenced by headlines and so on and so forth. The next one that I have on watch is SMX. So I had we did a open mic session on Friday, and I had the some lines in there already, but pretty noisy chart intraday. We had this nice move on Friday morning, and then it essentially just trapped all morning, and then it ripped up. So for me, I would look for something versus left. Ideally, we can see on the daily chart. You have this long consolidation here under $15, right? So you can see 15 as that top. Every time it nears it or it breaks through, it slams back down. So that is more so a higher time frame guide of the range anticipation if there are a lot of trapped shorts still in there. So if this does not fail, if on Monday morning we wake up and it's still in the 586s, maybe pose out of the gate, pose down to 540s, and if it rips up, then it could use the 657s as a trigger. And then do some sort of a circuit or so. But if not, I will be looking to trade any fail to follow through momentum. The volume is not really great, so this is not something that will be heavy size, but it's decent volume. It's just in this market we've seen a lot of 100 million, 200 million plus. So not necessarily the best candidate out there. But any sort of, if it opens, pulls back, and it rips up, we'll see if we get some sort of halt to halt type of scenario. And if not, if we open gap up 720s, clear out of the gate, and then look to fade the momentum. The next one that I have on watch is Serve. And Serve, they had some sort of a tweet on Friday. There was a shot in the commercial or ad of Pepsi and pizza delivery, whatever. So for me, I'm just looking at this Serve chart more so like ZAP, ZAPP, or what was this one, NNE. Once the move happens, then it's just on the backside. Yes, you do have these PRs here and there. Yes, you do have some news throughout the move, and it's just another way to gather liquidity for your next leg lower. So ZAP, we had something similar throughout the moves, and then you have this Serve. So it will be on watch. Ideally, any sort of exhaustion move versus 9 or 10s level, you can kind of put it on a little bit of a higher time frame chart and kind of see your 9s and 10s, 10-50s essentially. You had this little congestion area, and then you have a lot of inventory above that 10-50s level essentially. So I'll be looking at these levels if any sort of gap up and shove versus this 10-50s, 11 even clear out, that's fine. But the overall idea is, just continue to fade this in the long term back down where it came from, unless something has shifted. And the next one that I haven't watched is Lumen. So I think I had this in watch last week, and so far it's behaving. Again, for me, this is more so bigger time frame, bigger idea type of a move. So we are getting closer to the 640s key level that was identified, I think earlier on the move over here. So we'll see if next week we get, maybe a headline or something and give that extra shove that it needs to test this area, test this 640 area, and then, fail to follow through from there. So more so monitoring for that type of a setup. And last one that I haven't watched is SMMT. So ideally for me, this is more so similar chart structure to ASTS or what was the other recent one? I'll think of it in a second. But SMMT. Essentially looking for any sort of gap up parabolic that will be ideal, and then look to fade the momentum. So a couple of side notes on this one. I believe there was an offering on the 12th or something of that, like 235 million, roughly absorbed at 2270s. So let's put, I think they had something like average price of 2270, 235 million offered. Now what's also key to note about that is more than 30% of it was absorbed by insiders. So it doesn't mean anything necessarily. It's just, again, there was a member that posted in IU of, hey, have you considered the other side, right? Instead of just looking at the shorting. So, just trying to provide color for both sides. For me, I think I've missed, the long, and sure enough, maybe in a couple of weeks here it is at 70, and yeah, but who knows? Like I said, I don't like to chase this on the long side, so I rather just wait for something that I know. And if I'm looking for a gap up parabolic and mean revert, it doesn't mean I'm bearish. I'm not looking for this thing to go back down to $2. It's more so to take advantage of any sort of price discovery opportunity when it gets out of the its mean movement, and then faded for some quick percentages or whatever it offers. But ultimately, I would just be careful building a bias one way or another. This is also the type that this is also the type that's in my opinion, a great candidate for a buyout. So something we saw that happened with CBay last year. They had that move. I think it was right around here somewhere. They had that some sort of news, some trial news or whatever, and then they had that move. They had an offering, similar thing. It got absorbed, and then eventually, months later, it got bought out. So that SMMT will be on watch for ideally gap up parabolic, and then look to fade that. But the whole point is, if it's not breaking down, if there is a bid, there's just no reason to fight this. And these were the watches for me, Chris. Back to you.
Great. Yeah, just excellent points on SMMT. And I know that that's been on a lot of people's radars and scans. So that'll be a good one to watch in the upcoming week. For me, I have, it's going to be very market dependent depending on what happens on Wednesday with the Fed and things like that. But just kind of more general themes and things that I'm watching. We talked about Redfin a couple of scans ago, and just how
as people are pricing in rate cuts and things like that, what sectors really benefit from that? And real estate is one of those. As activity picks up, this is something that benefits RDFN. So this is a name that, on a multiple timeframes, you can have just some big trends kind of setting up there. And so it's just something to keep on watch for these periods where, it's acting how the thesis says it should act, so whether that's, big periods of, extension and then kind of consolidating and then the next move up, you could have things like this could be this cycle's CVNA or things like that are turning around. So just things to keep on watch. And it's just looking for pockets of when is it going parabolic and are you able to join that or then wait for the mean reversion? But you can see just the size of these moves is pretty substantial. So that is a name that I have on watch. And then mRNA, this is another name. So they had news that, this is a stock that was like kind of a one product wonder. A couple of years ago, they had their product. They catered to basically the entire world. And now that has kind of calmed down, that was their biggest product. And they don't really have a whole lot else that could match that. And so this has just been on a kind of a slow trickle down for a while. And so they announced that they're going to be cutting some capital expenditures. They're hoping to break even or make some money in the next, year, 2 years. And, something like this is still valued at tens of billions of dollars. And so something about a couple of these names is that they have very high institutional shareholdings. So basically you have a lot of like strong hands that hold these. And so when you have a bad piece of news like that, you can have these giant candles as one of those participants exits. So let's say you have a fund who had, $500 million of it or something like that. And they hear a piece of news and they're like, you know what, we're out. That's how you can get some of these huge flushes on names like that. So I'm going to be keeping this on watch for relative weakness. Especially if either the market turns down or if we start to see, some more volume come in and you see another one of those big institutional players kind of pulling out because, at some point, no one wants to be left holding the entire bag of this, whether it's an individual or whether it's a fund or someone whose, livelihood depends on their performance. So even if it means they have to get out and have a bunch of slippage and everything, you're going to see some more things like that, in my opinion, unless they have some kind of turnaround news. So mRNA is on watch for continued downside. SCHW, this is another name on watch for continued downside. We saw over the last couple of weeks that the financial sector, a lot of banks are under pressure, and that could be interest rate related. It could be due to new reporting rules with like some of their unrealized losses. The Fed was considering some, changing some rules around that. So you have a few names that have been hit particularly hard by that. JP Morgan was another one, but SCHW is on watch in case, the markets start to weaken up again. And this could be a go-to to play some downside. And for me, I'd be looking for something like puts on a name like this and, using some of these broader levels as kind of a risk point and, looking for relative weakness, looking for continued volume selling. So a name like this is on watch for me in the week and weeks ahead. Next, we have PLTR kind of on the long side. And this is something that has done very well in this market. It got added to the S&P 500 last week. Well, it was announced that they're getting added, but that doesn't take effect for a little while. But this has been really running nicely. And you can see just the breakout on a higher time frame, coming up to, we talked about as it was running into these levels, how a possible breakout and a retest would be expected in a situation like that. And now you're getting up to some of the prior levels. And from my experience, you could assume if you're going back 4 years or so, 3 years, 4 years, a lot of this volume that was turned there, even though it's high, most of the people from there are no longer the shareholders. And so a lot of that got churned over, all throughout here, all through this consolidation. So even though that this looks like very strong resistance, it might be medium resistance, but it might not be like super strong resistance because again, what players who were, most of the volume in 2020 or 2021 are really still there and like waiting to get bailed out. Maybe there's some, but I don't think it's the majority of people. So PLTR has been exceptionally strong in this market. It's been holding these higher lows. And so, you just have periods where either they might have a catalyst, a PR, or something, and that's giving it the extra push that it needs to make its next leg up. And then as it consolidates, you can wait for these pullbacks to see if you wanted to buy in on something on a dip. You can just kind of see the nature of these dips along the way. So PLTR is a name I have on watch, more on the long side for relative strength in this kind of market. And then GDX. So this has been in and out of play for a while. This is the gold mining index, and gold just made new all-time highs at $2,600 an ounce. And there's macroeconomic reasons for that. There's Fed reasons for that. But basically, you just want to keep an eye on things that are very strong trends and that are moving with a narrative. And so if the price of gold continues to go up, that's like the ship, and it can drag the anchor of some of these things with it. So I think that depending on what happens with the Fed meeting, this could be either in play for the next leg up, or it could be the end of this kind of mini run up and then maybe mean revert back a little bit. So I think it's just something to keep on watch. And then the next one and final one is TLT, which is just the 20-year bond ETF that tracks it. And I've said in the past, a lot of times around Fed meetings or other things, you want to look at short duration, or you want to look at like the 2-year bond or the 2-year note to really get a glimpse of what the Fed is saying. But in this case, I think that looking at the long end of the bond spectrum is important too, because as we've had a big run up, if the Fed says something that people aren't expecting, you could have a big flush back down. Or if the Fed is like, says something else, it could have a nice move up. So this will just be on watch, especially if a lot of stocks are kind of just, wicking back and forth and you're not exactly sure what's going on after the meeting. Sometimes bonds can be a more clean way to play some of the moves or the trends that happen after this Fed basically lays out their game plan. So those are the main names that I have on watch. And again, as things come up throughout the week, as catalysts and things like Stan mentioned, DJT, and that was a very similar situation to like BYND and RILY. Basically, the heavily shorted stocks who are just trading on low volume, and then they have a catalyst. It spooks out a lot of the short interest. It's a very sharp move up, like Stan was saying, a very sharp supply and demand imbalance. As people buy in, the covers come in, and then a lot of times you get that big spike. It'll halt up a couple of times, and then the volume will start to settle down. Supply and demand comes back into balance, and then you get that like big mean reversion trade, and it usually retraces half of the move or sometimes the entire move. So if you're aware of situations like that, you can capitalize on it with calls and on the long side, while knowing that after that supply and demand balance comes back into balance, that there's usually a big mean reversion trade. And so you can play both sides just depending on what you are comfortable with and what you are prepared for. So those are all the names that I have on watch for the week. Stan, do you have any comments on any of those or anything that you want to add?
I think those were great watches there that you had, Chris. Definitely expecting some volatility with the Fed meeting just around the corner. So just be careful with bias and size and in the volatility space, etc. And just the other thing is if you haven't seen the video with Tim, check it out. I think a lot of valuable information in there, and we're about a month away or so from trading for a cause. So I hope to see a lot of people there as well.
Yeah, 100%. So Stan, thank you for coming on this week. And I hope that everyone has a fantastic week ahead. And, all the IU members are going to get watch lists and things to be prepared for. So we're going to get after it. So Stan, thanks again and have a great week.
Thanks, Chris. Have a good one.
Thank you for watching Sunday Scan. Be sure to check out other content put out by Investors Underground, including interviews, podcasts, educational material, and more. Thank you.